Back in studio with us, Heidi, good morning.
Good morning.
We get to talk about one of your favorite things, and oddly enough, we're in the month of July, the 4th of July, and you like to talk about veterans and how you can help them, don't you?
Well, we're sure appreciative of them, and if there's anybody that has earned the right to be homeowners, it's the people who have fought for our country or have committed to protecting our Constitution. So there are some things that a lot of our veterans don't know about.
That's right.
And we've kind of committed that every couple of months we want to talk about this. There is a nationwide program, and it's specific. The dynamics of it are a little bit more specific to counties and state, but veterans who have a permanent disability through an application can have $300,000, the first $300,000 of their value, wiped out from the perspective of property taxes.
Nice.
So, and then if you are between 70 and 99% disabled, that is $150,000. And I think that that's relevant to the time we're in. We want to make sure we're remembering to honor our veterans at every level that we're able to.
Sure. Now, you are not a lender.
Nope.
But you know a whole bunch of them.
Yep.
And I know that the conversation, if you had a veteran that was purchasing a home, you would steer them in that direction, would you not?
I would definitely talk about it, and this is it does come into the conversations with lending.
Yeah.
Because if they're going to be, from a long-term perspective, having a little bit lesser of a payment, that might come into play, but they still have to qualify based on
Sure.
the tax status that is there, because this is the problem, is that there's a lot of people that qualify for this that don't know about it.
That's why we're having this
Yes,
conversation.
and they're not taking advantage of it. And since we mentioned it a couple of times in previous programs, I have had some people say, I looked into it and I qualified for it.
Nice.
So, I mean, that, if we've done anything here in the last couple of years, that is a good thing.
You
right?
bet.
So, but yeah, so I want to just remind people out there again, the application is attainable through the county in which you live.
Okay. Now, what if I've been in my home for a while? I'm a veteran and I was not aware of this. I can go back, can't I?
You can. It's only going to apply to the year in which you
Right.
make that. But then once you do it, it's permanent, and
Yeah.
it also stays permanent for your spouse.
Yeah.
So if you lose somebody, that status remains.
You know, I have talked with veterans about this, and one guy does not know, but the other one does.
Yep.
And the two of them get together, and it's like, are you kidding me? Boy,
Yeah.
they get happy in a hurry.
Yeah. Well, I think that there's a lot of people that could be really happy at this point if they are able to qualify for it, because we have seen our property taxes elevate.
Yes.
And I think that that's when people start talking about things, is like, how can I save money? This is a really well-deserved and earned benefit that veterans can take advantage of.
Now, what about assumable loans?
Well, that is for a conversation for buyers,
Okay.
right? And really sellers too. So if you have a home that you are selling and it has a VA loan, for example,
Okay.
and let's say that veteran moved there in 2022 and they have a sweet little 3% interest rate.
Right.
That loan can be assumed by the next buyer.
If they are a veteran or not?
Or not, yep, either or. So,
Nice.
Yeah, so there is a little bit of a longer process potentially, but I do think that sellers who have some flexibility in the timing, because it might take, let's say 4 more weeks or 3 more weeks to get through that process, because it would take that person generally away from using the lender maybe that they started out with, and they'd have to actually connect with the lender that is holding the loan currently.
Sure.
And so they qualify for that, but the status with that is that you do have to have the funds to make the down payment to bridge the two. So let's say
Right.
there's a $400,000 home, there's a $300,000 assumable mortgage. The buyer has to come in with the other $100,000.
Right.
So, it's a unique situation, but what an opportunity.
That is what realtors are for, to put those people together.
Correct.
All right.
Yes.
Windows, HVAC, and other big ticket items.
Okay, so when we're out looking, and the whole theme here is, where can buyers save money right now? Sometimes it's in the unseen. So you're comparing homes. We just talked about return on investment,
Yeah.
and recommending what people should do. At the end of the day, there's a lot of homeowners that come in and they've been there for a while, and they put in new windows, they eventually put in HVAC. hailstorm comes, they get a new roof. Homes that have those 4 big ticket items done, if it's not cosmetically what you want, but it has those things, I would really compare apples to apples or apples to oranges.
Yeah.
If you're looking at the same footprint in the same neighborhood, and one is dated and one is not, but the dated one has all these big ticket items, that makes so much sense.
Yeah.
And it's hard to convince people of that, but those are things that you don't have to do or worry about.
Mm-hmm.
And you can make the rest of it your own. It's worth paying attention to. The other thing with the HVAC is you think about your utility bills.
Right.
You know, that is part of your housing budget.
Right.
And if you have $50 less in gas bill in a January versus in a different home, that makes sense.
The rebates that are out there right now for upgrades are phenomenal.
Yes, yeah. There is that as well. I'm not a tax professional. I'm not going to
Yeah,
guess
yeah.
what those all.
Yeah.
But the HVAC guys know.
They do.
They'll
Just
tell
give
you.
them a call.
Yeah, they'll
Jeremy Salzberg is another one of our sponsors here.
They'll tell you exactly what you can save by doing it.
Okay, property taxes. I gotta think that you should know what your property taxes are going to be ahead of time. Have you got a levy there? Is this one gonna be expiring? That kind of thing.
Yeah, well, so it is a thing where we always address assessments, right? The assessments on a property are relative to, you know, what's going to happen at the end of a transaction. When it comes to property taxes, I do like for people to pay attention to how long has it been since this home sold.
Okay.
So, for example, somebody's buying a home that somebody has lived in for 30 years, and they have done a lot of those, updates that we talk about, and you all of a sudden are buying the home, let's say at $350,000, but their tax assessed value is $179,000.
Yikes.
What's going to happen is that the year after you've been there, your taxes are going to go up. So you have to not just base your math of what my housing budget is on what's happening right now with the numbers that are in front of me. Pay attention to what they potentially might be.
Okay.
And that's an easy phone call to figure out generally. The county can usually say, yeah, if you sell it this is what we think they'd be.
Insurance the same way?
Insurance is not the same way. I think that insurance is based much more on replacement value.
Okay.
So, if credit might come into play, if somebody's there for a long time, they might get a little bit of a break versus a new insurer. But insurance is usually based on replacement value, so that shouldn't fluctuate as much. It's fluctuated in the sense it's been on the rise. Right. But house to house based on sale, it should not be dramatic.
Again, as always, Heidi,
Yeah.
Great information.
Thank you.
How do we work with you?
You can call us anytime at 320-774-2400 or visit VoigtJohnson.com. Great gallery of agents there for you.
Heidi, thank you.
You bet.